The Trade Desk is a technology company founded in 2009, headquartered in Ventura, California, specializing in programmatic advertising via a demand-side platform, DSP. The platform enables advertisers to automate, optimize, and personalize digital ad buying across channels, including connected television, display, audio, and retail media. It processes tens of millions of bid requests per second, offering audience-driven targeting with high precision and privacy sensitivity. Leveraging innovations like Unified ID 2.0 as third-party cookies phase out. In fiscal year 2024, the Trade Desk delivered revenue of approximately $2.44 billion, growing 26% year over year. Net income rose to roughly $393 million, translating to net margins of about 16%. Adjusted EBITDA exceeded $1 billion, with an EBITDA margin near 41%. Q4 2024 saw revenue of $741 million, net income of $182 million, and adjusted EBITDA of $350 million with margins approaching 47%. For the 9 months ended September 30, 2024, revenue reached approximately $1.704 billion, up 27% versus the comparable prior year period, yielding net income of about $211 million. Adjusted EBITDA margin remained strong in the 40% range. Gross profit margins have consistently remained around 80%, while operating margins climbed from roughly 10% in 2023 to about 17% in 2024. Free cash flow for the full year exceeded $632 million, improving from the prior year and driving a robust balance sheet with approximately $1.37 billion in cash and zero debt. The Trade Desk's business model centers on providing advertisers global access to premium digital media inventory via programmatic systems. The company's suite includes audience forecasting via its Koa AI engine, identity resolution via Unified ID 2.0, retailer data integration for retail media, and CTV operating system development called Ventura, slated for launch in late 2025. This operating system aims to bring transparency to CTV ecosystems by separating platform ownership from ad infrastructure, challenging incumbent OS providers. Management, led by CEO Jeff Green and CTO David Pickles, emphasizes innovation, customer retention, and platform independence. The company enjoys high customer retention, over 95% for 27 straight quarters, and mild churn, supported by joint business plans with clients growing 50% faster than other revenue segments. In late December 2024, the Trade Desk undertook a reorganization to streamline operations and reinforce brand direct relationships to secure better margins and efficiency. Competition includes legacy players like Google's Display and Video 360, Amazon Advertising, MediaMath, and Spring's DSP, as well as walled garden platforms from social media and streaming services. The Trade Desk's competitive edge lies in its neutrality, transparency, and AI-driven optimization. Alphabet's CEO Sundar Pichai has specifically acknowledged the Trade Desk as an innovative competitor in the ad space, demonstrating its rising significance. Peer benchmarking places the Trade Desk at a premium valuation relative to both traditional ad tech competitors and media platforms. The stock trades at approximately 15 to 16 times forward revenue and over 100 times trailing EBITDA, reflecting premium positioning. Peers typically trade at lower multiples due to lower margins or concentration in less scalable ad formats, while the Trade Desk benefits from high-margin CTV growth and robust free cash flow. Analysts are overwhelmingly positive with a consensus rating of buy. The average price target is roughly $101, implying about 27% upside from current levels. Targets range from a low near $68 to highs around $145. Recent updates include Citigroup raising its target to $90, UBS to $105, and RBC maintaining an outperform rating with targets near $85. Multiple firms including Wedbush, Morgan Stanley, Oppenheimer, and BMO have revised targets in the $100 to $145 range. A simple discounted cash flow model using assumptions for continued mid-teens to high-teens % revenue growth long-term operating margins in the high teens, free cash flow generation above $600 million, a weighted average cost of capital around 8 to 10%, and terminal growth near 2% suggests an intrinsic value per share in the range of $80 to $120. Conservative scenarios yield values toward the lower end, while optimistic assumptions around AI acceleration, Ventura OS adoption, and retail media growth push toward higher values. Technically, TTD recently experienced a significant pullback after earnings disappointment despite strong fundamentals. The stock remains above its 200-day moving average, though short-term support exists near $75 to $80. Resistance is seen in the $90 to $100 zone, with breakouts above 105 potentially fueling momentum. Relative strength ratings have recovered into bullish territory following oversold conditions earlier in the year. Investment recommendations vary by strategy. Value-minded investors may wait for levels near $75 to $80 before deploying capital, recognizing potential downside amid macro uncertainty. Long-term growth investors may view any pullback as an attractive entry into a high-quality ad tech platform positioned for secular growth in CTV and retail media. Momentum and optimistic investors may target entry near $90 to $95, with upside toward price targets above $100. Bearish or cautious investors may set tight stops below key support near $75. In summary, the trade desk is a high-margin, profitable programmatic ad tech leader benefiting from structural shifts toward connected television and data privacy regulations. Its growth is underpinned by strong AI platform investments, solid client retention, and a balance sheet with zero debt and healthy cash. While recent reorganization and macro softness have pressured near-term sentiment, the long-term thesis remains intact. Fair value resides in the $80 to $120 range, with upside to $145 under strong execution.